Hello and welcome to BQ Prime. It's Friday morning, and we were here on BQ Prime trying to discuss Punjab National Bank's stellar quarterly results that were announced last evening. I have with me Mr. A.K. Goel, the MD and CEO of the bank. Mr. Goel, welcome to this conversation. I wanted to start firstly with this profit number of about 4 times increase in the profit number. To your mind, sir, is this largely because of the provisioning impact that is helping the profit grow, or core business is also improved?
Very good morning, Mr. Viswanathan. The profitability number is not only the result of the reduction in the provision for the NPA, but if you see my NII also, there is a 400 crore rupees increase in the quarter to quarter in the NII. So there is not only the recovery on account of the NPA provision. In all the parameters, you see some of the parameter other income is also increasing. Recovery from the technical written off has also increased. Then NII is also increased. Then increase in the 4% in the saving bank account also. So this is a combination of all, but definitely there is also impact of the reduction in the provision for the NPA also.
Okay, sir. Talking about the core business now, I wanted to understand. A lot of banks are starting to now getting towards the end of the repricing of their deposits, and obviously because of that, the cost of funds goes up, and therefore your NIM faces some impact. At PNB, what is the situation looking like? How much of the deposit is pending sort of revision in rates, and what is your outlook for NIM for this year?
As far as first, I will tell you ki what deposit has to be repriced around 85%.
Okay.
85% term deposit has already been repriced. Only 15% of the deposit has to be repriced. If you see my cost of deposit, it is around 4.84%, and I am of the view that there will be a further increase around 10 to 15 basis points, not immediately in quarters to come, because the deposit will be repriced at the time of the maturity, which we have taken in the past also. As far as your another question regarding the NIM is concerned, as on date, the NIM is around 3.11% global NIM. And domestic NIM is much more than last time. We have given the guidance for 2.9 to 3%. Still we are maintaining that. Reason behind for the maintaining the 2.9 to 3 instead of the, although we have seen much more than, because first is the impact of the deposit repricing. Second, there is so many loan where we are not getting margin of the 3% or the 2%. In some of the deal we are getting only the 50 basis point margin, 75 basis point margin, because it is an opportunity. So we are not allowing the opportunity should go to maintain the NIM in the percentage only. So NIM in the percentage will remain the 2.9 to 3. But as far as NII is concerned, we are confident and assuring all of you that whatever the number we have achieved in the 9,900 plus crore rupees, that we will be in a position to maintain even much more that.
Okay, interesting that you mentioned the concept of not letting go of opportunities just to maintain the NIM. Because the commentary from your private sector peers is the exact opposite. They would like to maintain the NIM. Even if it means that the opportunity goes away. But at Punjab National Bank, now that your credit growth is about 13.5% this quarter at the end of September, if I'm not wrong, and your target is about 12 to 14. That's where the target is limited to. But going ahead, as you try to tackle more opportunities, take up more exposures, do you think that maybe you will breach this target and you probably report a higher credit growth towards the end of the year?
Whatever we have given the guidance last time also and this time also, the credit growth we are trying to achieve between 12 to 13%. Even as on date, it is more than 13.83. So though our guidance is 12 to 13%, so what I knew, because as you are saying, private banks, sector bank, they are trying to maintain the NIM in terms of the percentage. I am of the opposite side. I am not worried about to maintain the NIM in the percentage. I am worried about to increase the absolute number of the NII. As I told you, there is some deal which is related to the AAA rated account, which are very price sensitive. So where we will not be in a position to maintain the 3% NIM, but definitely we will get some money out of it. So this is the reason absolute number NII will be increased, but maybe there may be a little bit dip in the as far as NIM in the terms of the percentage is concerned.
What is your loan pipeline looking like for this quarter and the next one before March 31st?
around 1 lakh crore. Around 1 lakh crore is pipeline is available, which is already sanctioned, because some of the account in the pipeline is related to the term loan, because they will be disbursed as per their requirement also, and even some of the working capital limit also, which has not been utilized in full also. So as on date, around 1 lakh crore book is in pipeline also, but there is a lot of demand for the other loan also, because there is a procedure. We are clearing the NBC, then they are sending the proposal for the final sanction.
Okay. I was looking at the retail constitution of your loan book. Now, there obviously, percentage-wise, your personal loan book is growing much faster. Of course, it's a significantly smaller base than the rest of your loan segments. But do you think that there is any need for caution on the personal loan side at this stage?
First, I will tell you what is the percentage of the RAM. RAM is around 55%.
Yeah.
But your specific question regarding the unsecured loan on the retail book.
Yeah.
So that is very less as compared to the other institution also, because as on date, around it remains between the 25,000 to 27,000.
Yes.
And there is another 4,000 crore rupees which is also in the shape of the personal loan, but that is related to the pensioner. Because it is, although it is unsecured, but it is a better than the secured, because every month we are getting their pension also. So there is no worry in the pension loan. So I am talking about only 25 to 27,000. It is a mix of the personal loan. It is a mix of the some of the education loan where we are not getting the security. Third is the credit card.
Okay.
Out of this, only 17,000 crore rupees is the personal loan. Out of which, the 17,000 crore rupees, 4,000 is the digital mode, which we have started in the last June 22, and remaining 13,000 is the physical mode. As on date, only 1.22% is the total NPA in the entire personal loan book, and the only 41.41% is the NPA in the digital mode. So digital mode, because it is based on the rule engine also, so there is a quality of the personal loan is much better as compared to the physical. So we are not seeing any concern in the unsecured retail portfolio in our bank.
Of course. Mr. Goel, I wanted to also tackle the agri loan book. Now, obviously, that's part of the RAM strategy, right? It's a significant part of it. And so is MSME. But if you look at the NPA number, yes, it has come down, but it's still at about 16% of your portfolio. I just wanted to get a sense of the impact of, say, monsoon or any kind of slowdown in the rural economy, because that's something that's been highlighted by some of the other lenders. Even large FMCG companies have been pointing out that rural growth is stalling. So do you see any kind of impact on your portfolio because of this?
You are very much right. As on date, my agriculture book is 1,46,000. What is your special query regarding the NPA? I think I will divide in two parts. One is the legacy issue, another is the new underwriting. I have the data with me from the 1st of the July 20 to 30th September 2023.
Okay.
It is a data of the 39 months basically. I will give the data. In May, we have sanctioned around 88,559 crore rupees we have sanctioned. Out of which 86,884 crore rupees we have disbursed. The outstanding in this agri loan is the 54,284, out of which the NPA is 197 crore rupees, which is coming on or hardly 0.23%. So I think whatever the as on date the total NPA in the agriculture is the 16%. That is on account of the legacy issue, because we have taken a lot of improvement in underwriting standard as well as the collection efficiency. So even for the agriculture loan, I think new acquisition there is no issue at all. Whatever you are saying, there is, and I may tell you there is a good demand from the rural sector.
Okay, fair enough. I'll quickly start wrapping up this conversation, but on the NPA side now, of course, you have a PCR of about 92%, which is including written off accounts. But in terms of your future portfolio, do you think that any further provisions need to be made, or are you at this point in time in the clear?
Since we have already achieved 92%, so my aging requirement has drastically reduced. Secondly, if you see the slippage, quarter by quarter slippage is reducing. The last quarter slippage was only 1,800 crore rupees. And we are further quarter by quarter it should reduce. Why I am telling this? Because as I given the data of the agriculture, I have the data of the entire portfolio of the last 39 months, which is around 6.68 lakh crore we have sanctioned, 5.97 lakh crore we have disbursed, and 4.63 lakh crore is the outstanding, in which the NPA is hardly 1,314. So it is coming 0.22 in the entire portfolio of the new acquisition. So on account of this, we are not seeing any stress in any new acquisition, and we are quite confident that further whatever the slippage number we have achieved in the last quarter 1,800, it should reduce further also.
Okay. Lastly, on the capital adequacy front, now of course you are pretty much safe on that front, but you still have some headroom in your borrowing target for the year. Are you expecting any kind of fundraise coming up soon?
As far as capital adequacy is concerned, as you rightly told, as on date we are above 15%. Even 15% mein our CT1 is also comfortable, more than the 2.5% of the regulatory requirement. So there is no immediate need also. We have got the approval of the board of the around 12,000 crore rupees, out of which 7,000 crore rupees for the AT1 and 5,000 crore rupees for the Tier 2. Out of which we have already raised 3,000 crore rupees in the last quarter of the AT1 and 3,090 crore rupees in the June quarter. And even more than that, what will be the requirement, because the profit which we have earned of 3,000 crore rupees in the first half, that has not been factored. If we take the same figure of the 3,000 crore of the remaining half year, so around 5,000 crore rupees apart from the whatever the dividend we will declare, that will be add to my CT1 as well as the total capital adequacy ratio. So there is no immediate need, but definitely we are just waiting. If rate will be as per our choice, we will not mind to raise the AT1 or AT Tier 2 in the remaining half year if rate is our choice.
All right, Mr. Goel, thank you so much for joining us on this conversation. Pleasure talking to you, sir. And
Thank
please
you.
do continue watching BQ Prime for further news and updates.